Hello traders, my name is Logan with Funding Talent. Today we are bringing you our first market forecast for this week. We are going to be going over everything you need to know fundamentally in terms of news and also technically on all of our important pairs, including the major currency pairs and the major indices. So let's get into it.
So here we are on the charts, so let's get right into it. As you can see for this week, we have a couple of high impact red folder news events on Tuesday, Wednesday, and Thursday, with Wednesday being the largest day in terms of news events. So, if you're a scalper, I recommend that you be careful on Tuesday at 2 p.m. Eastern Standard Time and at 2:30 Eastern Standard Time as well. So, our eyes are on the stimulus package. Last week, President-elect Joe Biden on Tuesday spoke more about his new COVID relief plan. This is a sweeping measure expected to include cash payments to Americans and money for distributing COVID-19 vaccines. The new plan in response to the COVID-19 crisis proposes $20 billion for national vaccination program and $50 billion for testing. The plan calls for increasing direct payments to $2,000 from the already existing $600 that is hitting Americans' bank accounts. This would mean an additional stimulus check of $1,400 would go out to every American that is eligible. This week also will be interesting as it is one of the busiest weeks of the earnings season, with focus turning to reports from big firms including Apple, Microsoft, Facebook, Tesla, and much more, as you can see. The implications of further stimulus. As we learn more about the coronavirus stimulus package, it only seems predictable that an influx of more stimulus will slow the ongoing surge for US dollars. The value of the US dollar when compared to other currencies is likely to decrease in light of the stimulus package. This is the goal, as when more dollars are introduced into the economy, the country will have to counteract the effects of deflation. The coronavirus stimulus package will theoretically strengthen the US economy. This could result in even more of a demand for the US dollar. However, especially if other leading currencies continue to drop in value. Remember though, a primary purpose of the stimulus package is to prevent deflation and pump money back into the economy, which will help get the country's economic wheels turning again. In terms of fundamentals for this week, the biggest thing I am keeping my eyes on is any updates with the stimulus relief package and also the earnings release. While at Funding Talent, we do not trade individual stocks, we do absolutely have value in seeing how the earnings week does and how it will impact the DXY and also the other indices, which a lot of our traders do trade. With more dollars in the economy, consumeristic and investment spending will increase. Investors globally with this news, combined with the news of COVID vaccinations coming into effect, will be less risk averse and more inclined to move their money into riskier investments. This is what we call a risk-on market environment. A risk-on market environment means expectations are higher for further economic growth. In this market, we can expect risk-on assets to perform better, such as the CAD, the New Zealand dollar, the Australian dollar, the euro, and the pound. The USD is an interesting case as this can go both ways. The moral of the story is, in the coming weeks, we'll be looking for increased gains in those currency pairs and potentially money flowing out of risk-off assets, which are considered safer. These include metals, the Japanese yen, and the Swiss franc. As you can see, this is an S&P 4-hour chart. We've been moving nicely in this uptrend since November. We're riding this bottom support line now, looking to see if we can get a break lower and a retracement back down to that 3,600 level, or another push higher to this 4,040 level, which is our next resistance. If we get a break of the support line, you can absolutely see that retracement coming into effect and a pullback happening. Although, there's a chance that it does not break the support line and it goes straight up to that resistance level, so we're ready for either situation. It's better to react rather than predict. So, here we go on, moving on to USDJPY. As you can see, we're also on a 4-hour chart here. We were in this descending wedge for a very long time, and we recently broke out on the 11th of this month, and we've been forming a lower channel now for the last couple of days. So, what I'm looking to see is a break out of this channel and to push higher to this upper resistance fract, which is at the 104.6 level. Here, we are looking at GBPJPY. We've been moving in this uptrending channel for a while now, retesting this monthly critical zone. As you can see, we got a breakout of this bottom support line last week, but we came back and we're retesting this higher time frame monthly critical zone and also a lower time frame 4-hour resistance fractal. So, we're looking to see if we can get a bounce off of these 3 different confluences and get a push lower to the lower band of this channel. There's also a chance that we break higher, breaking this 4-hour fractal and the monthly fractal. If we can do that, we can see a lot of increased gains in GBPJPY, as if this does happen, it is most likely correlated with the strength in the pound. So, moving on to AUDJPY now, again on the 4-hour chart. This one is a little bit more indecisive. I see that we finished a third wave rally right now, and it's making it seem like we could either go into an extended third wave by breaking out of this daily resistance fractal and bouncing off and maybe pushing higher, or we could start to retrace now and head down to this 78 level to this 76 level. This would be our 38.2 to 61.8 retracement zone. That would be the best zone to see a retracement come to, and then start again in the uptrend, because again, we are on the third wave and we'll be looking to expect the fifth wave. Okay, USDCAD. As you can see, we tested and very strongly rejected this weekly support zone. We are now heading back up towards this next weekly resistance, and it is the only resistance in sight. As you see, we've been downtrending for a while, so getting a resistance would definitely not be out of the picture, and it's what I'm looking for in this next week. A push higher to this $1.30 zone. Now, we move into the DXY. As you can see on the 4-hour chart, earlier this week, we broke an inverse head and shoulders, and that is still not invalidated. We've pulled back far, and we've actually getting close to the stop loss, which would be set below this right shoulder, which would happen right here at this 89.9 level. But as you can see, we're retesting this 4-hour support fractal, and we're actually rejecting this now. So what I'll be looking to see is a push higher or a push lower. If we get a push lower and this stop loss breaks, the head and shoulders is therefore invalidated, and we may be able to expect a push lower. Again, as I said previously, it's better to react rather than to predict. So we're going to be watching this very closely and see what it does. If we push higher, then we're going to be making plays on long currency pairs that are long the dollar. We are going to be making plays on currency pairs that are long the dollar. Now we get into our chart of the week, Bitcoin USD. As you can see here, in the B wave, we also had a head and shoulders on the 4-hour chart. We broke that neckline and have been downtrending ever since. The interesting part of this is we've actually not hit the final take profit for this head and shoulders target. The head and shoulders price target also confluence with the 161.8 trend-based fib extension, and prior support is this 27,610 level. So what I'm expecting for this week is a push lower, breaking this 30,300 level, and then getting to that 27,610 level. But, as you can see, we've had a lot of rejections of this 30,300 level, so if we get another push lower, and then once again it rejects it, then we will be reconsidering and maybe looking for long opportunities on Bitcoin. So, we also performed a currency basket analysis, which was based off of every currency pair's individual weighted average. As you see here, we have Japanese yen weakening this week, potentially, the euro strengthening, the pound weakening, Kiwi weakening, the dollar strengthening, the Australian dollar weakening, and the Swiss franc and the CAD are indecisive. As you can see, this analysis does line up fairly well with our risk-on market sentiment. So now, we're done with the charts.
So, that was this week's market forecast. Which analysis did you like the most, and which currency pair do you think you'll be trading this week? If you enjoyed this video, be sure to subscribe for more, as we're going to be releasing these every week on Monday. Also, if you're not followed to our other social media platforms, be sure to follow us there. And on behalf of everyone from Funding Talent, happy trading.